Hello, hello. Can you guys hear me? Just checking on the sounds. Hello, hello. Should be all right then. Let me check for the other platform. Hello, hello. Okay, everything's good. Okay, so sorry for the mistake just now because the Zoom's audio is not on. And yeah, let's recap on what we have talked about. So on last, uh, you can just check on the summary table here. Actually, the summary table here is all the options that have been called. And this is not up to date yet because I just update it once a week. And this week is not, it's still going on, so I haven't updated. But I have closed most of them in last Friday because I don't like to hold the options for the last week because when when it's on the last week, the time value of the option itself tend to be decay a lot more than what it used to be. So I don't like to hold for the last week when it close to the expiration date. So even though the title say that I turned 810 into 6,000 something, it is, I need to be honest, because this is actually a clickbait because I exited not at the peak. As you can see from the chart for the option itself, this one is already going to expire by today. And you can see when I'm calling it is on February 20th. And the price that I'm calling it is $4.05. And you can see that it's allocating at the bottom when I'm calling it. And when that happened, we do have a very suffering time along, and it come back to retest and it makes some like hanging man candles. But my principle is that I will not do a lot of trade management along the way because I just let it run and then let it run from A to B, and then until it hits my target, then I will exit my trade. And the most important thing is I do the trade management not based on the option chart, but based on the asset chart. So later on, we will move into the Apple chart to see how it goes. And as when you check on the Apple chart, there's no reason for you to exit before the pump. Okay, so as you can see, even though it go up to like $30.82 at the peak, but I'm not able to exit at the top because I don't like to hold for the last week. So I exited at this candle. Not sure if you can see that. I exited when at this candle around 24. So my money made is not 6,000 and something. It's around 5,000, close to 6,000, but not that much. Okay, 5,000 something. That is the amount that I have flipped to with only these options. Why I'm using it as a title? Because this one is the one that have go up the most in last month. And you can see here, most of the trade is making money. And this trade is providing me the most significant value, most significant gain in my portfolio. And even though you can check that all these go to zero, no value at all, but this is purely based on the highest point and the lowest point. But I do make the trade management uh, according to the asset chart. So I didn't have any options that go to zero value because I will do a cut loss. And if you're not checking along with me, you can just check on the last week recording. And we do have the video that explaining every one of them. And then if you are catching up with me, you can see that our losses will not become a negative 96%, 98% or whatsoever. It will become something like negative 45% or something similar. So your losses is not that big. Meanwhile, you can flip your profit by multiple X. And yeah, this is very simple. And for any of you that didn't be aware of what is options, let me give you a very brief explanation on it. Okay. So options, if you just check along the, oh, my CFD go into profit. A very beautiful 1 to 2 risk to reward ratio. So yeah, a good trade for tonight. Yeah, coming back to the pivot and the testing and break off the candle they're rejecting on the pivot, and then have a very nice push with a 1 to 2 risk to reward ratio. Nice trade. Sorry that is not catching on the live stream because I have entered at at this candle actually when they break the previous high. And yeah, so it's quite late comparing to the live timing. So okay, a very good trade. So let's get back on Apple, AAPL. So in case that there's any one of you that didn't be aware of what is options, I will just explain it in a very human language way. So you don't need to care about all those like the very difficult explanation or whatsoever. You can just think it as is a leverage to multiply the movement. So I believe that every one of you might have heard that there's some ETF that can move like 2x of a certain asset movement, just like TSLL, which is a Tesla 2x uh, ETFs or something similar. So there's also a consumer index that have a 2x or 3x effect. So you can consider option as a tools that can just multiply the having the multiplied effect on the movement. So for example, when the Apple is here, even though when I'm calling the trade is on this day, even though from this point onward, it moved down to like only 11%, as you can see, it only moved for 11%. Even though I do a short on the share here, I only able to make a 11%. But with the options, I able to flip my account, not my account, but this particular position into 6.6x. Yeah, to be specific, to be honest, it's just around 5.8x for me if you're according to the real number, because I didn't hold for the last week yet. So comparing to just 11%, you are able to make like a very huge percentage, like a 580% movement. So this is what our options will tell you. And why I'm able to catch this one, because I bought a put options. As you can see, the option that I call for Apple is a put options with a strike price of 240. And how to select the strike price is a art, it's a science. So we are not going to talk about that for here. And because I buy a put is a bearish perspective on the share. When I'm expecting the price to move up, I buy a call. Call. When I'm expecting the price to drop, I buy a put. As simple as that. So when the price go up, a call will give a leverage effect on the movement going up. And whenever the price goes down, the put will give a leverage effect on the dropping movement. Okay, so this is the only thing that you need to know, the call and the put. And you might heard that something's like you want to execute the options or not, and some similar questions regarding on the exercise or on the strike price selections. But believe me, everyone's come here to trade options because we don't have the enough money to just buy a very huge portion, a bulk of the share. So we use the options as a leverage tool because we want to flip the small amount into a very huge amount, just like we are buying a jackpot. So when we are having this kind of perspective in advance, we are flipping the account. That means we are not going to target for exercise of the options. So the strike price, I will suggest you to buy the out the money one because it's a lot cheaper when it comparing to the in the money options. And if you're not aware of what is in the money and out the money, you may do your research a little bit. But if you're not so sure about what is the true meaning behind, maybe you can just oh maybe you can just thank for Richard Chi for mentioning that just now the audio is not on. Okay, so actually you can just where am I? Oh, okay. So we are here to trade the options. So actually, we just want to gain from the option movement. As you can see from the chart here, the Apple have its chart, but the options have another chart. So whenever the Apple is dropping from this point down here, the put options goes up from here to here. So put options have an inverse relationship with the asset. Meanwhile, the call options have a direct relationship, a positive correlationship to the asset. So the most important thing is this relationship and the leverage effect. And how to choose the strike price will affect the leverage effect that it brings to you. And let's see Apple. Since we are using Apple as an example, later on, if you have any chart that you want to look into, you can just raise, and then we can look into it. And you can see from this, this is USmart desktop interface, and on the left, you have the call options here, and on the right, you have the put options. If you are aiming for a bearish movement, go for this, the one that's showing green. If you are aiming for a bullish movement, just like what I've been called for yesterday. I have been called for yesterday for a Tesla rebounds. So let's check on Tesla. If you join our group and there's some user that asking about Tesla and what's the price that we can just pay attention to it. And this is actually the target zone that I've been talking about all the time since it dropped. So we able to catch the drop from 430 when it first dropped, and then have a retest on this so-called a support become a resistance, and we are able to enter here with a put options. Afterwards, I've been calling for a call options when it hits the bottom here. Not at this moment, but around here. And then what happened is it just bounced back. And why this level is worth to pay attention to is because this is actually the area that most of the money accumulated on. As you can see, this one is what we call the money allocations. When you pull it from the bottom until the top, then you can see that where is the money putting in and all of the pricings along this uptrend. Can you understand what I mean? So in this uptrend movement, the nearest uptrend movement. When it start on the bottom, money start to flowing in. And then most of the money is accumulated here. That means when it going up from this level, most of the player in the market are making money. So what happened when it come back to this level? It start to, when it's just like when you get in the trades and then you make money. But afterward, when it dropping down, you will be afraid of what if the profit turn into a losses. So normally when they hit this kind of level, what I call an importance level, those people with a very huge positions will start to take actions. And that actions will reflect on the chart. And as you can see from this point, when it first touching their entry level, they start to be panic. And maybe there's some money flowing in and pushing up. We don't know about that. But what I've seen here is that it tried to break their entry level twice. The first time and the second time. And it failed. They are managed to hold the share price above their entry level. And what happened is, with more money supporting on this level, the share price will go up. Does it make sense to you? So this is one of the call options that I have been calling yesterday. And let me check on the even though it's a little bit late when comparing to my real executions. So not this one, but this one. So yesterday I've been calling for this with a strike price of 290. Let's switch to English since this is a English section. So the above is the theory that back from my perspective. And you can check on the bottom, this is the real executions. So buy a call option that is expiring on April 25. So let's check on the one, Tesla. But Tesla option actually very expensive. So if you are a total beginner or you don't have that much of money, I would recommend you to just trade with TSLL. Okay, so I've been calling for this one, February 25th, with a strike price of 290. I don't think that you guys are able to catch you enter into the positions right away, because when yesterday when I'm calling this and when the market is open, the option price jump right away. So if you are not rushing into it, you will miss the trend. But actually I do catch on the bottom previously, not yesterday, just a few days, just last week. So I'm able to catch quite a very beautiful trend. And yesterday, when I'm calling it, is the price is on 8/15. And what I'm saying is, if the share is the stock price up to around 290, okay. So yesterday, if it goes up to 290, around 18%, your options will go from $8.15 to become $18.15, or in between, $18.15 to $19.50. How do I get this kind of leverage figures? Now I will show you how. First thing first, this is what you need to check on. There's a leverage here, 14.61. But this one is actually not the real leverage effect that you need to pay attention to. Why? Because it didn't take into considerations of the time decay and also the option premium that you bought, which it didn't take into consideration of your costs. And the effective gearing here is what you need to pay attention to, which is a 6.82. And this is the real leverage effect that have been placing on Tesla. So when you bought this one, if Tesla go up by 1%, this option will go up by 6.82%. So yesterday, Tesla go up a lot, so this one go up too. And let's see, I bought it on last Thursday. So I bought it here, which is when it is forming this bottom here. See, it forming this bottom, touching it again on Tuesday. And on Wednesday, Thursday, it's just floating around here. This is where I get my entry on, which is at this beautiful bottom. And now it goes up like this, crazily, easily near to 4x, I would say. Okay. So this is how you are going to trade this one. And other than this, there's still another one, which is Google. Still the same thing. You can see that I have been pulling for the money allocation for this downtrend and also for this uptrend. And what a coincidence is, this the money allocations for these two trends is around the same. That's why this area is worth to pay attention to. And whenever it tests this one and standing above, I get into the options. When I get into the options, my exit criteria will be either it break and close below of this allocation zone. And that will mean that all the money that is flowing in these two trades will be losing. Then I lose with majority of them, which I'm feeling very comfortable because I'm not the only one who is losing. So this is a little bit of the psychology way of how to make yourself feeling better, I would say. So my exit criteria will be either it break and close below, or it just go up and then I make a profit. Then it's still a very good things to do so. So now when even though I have a loss in the previous day, now it flipped back up and then it able to just come back a little bit, just a little bit above my entry level. So we will see how it goes later on. And when we are doing this one, actually what you need to pay attention to is, first thing first, the macroeconomic. When you are doing a trade with your empty hand, the most important thing is, are you following to the market directions or not? If the whole market is going up, then how can your bearish perspective work? And this is proved by my last month result too. When the whole market is dropping, you can see that all of the bearish, the put options here, the last letter with P means put options. When the whole market is dropping, you can see that all of the put options go into profit. Not every one of them, but majority of them. And then the others might be going down soon. Who knows? And you can see what obvious is you can see the performance of the call options. Only one outlier, which is Bilibili, is performing good. Meanwhile, the other all goes into zero. So this is the outcome if you go against the market. So first of all, you determine the market directions. And my personal perspective is I will check on QQQ. And from this day onwards, I am having a very bearish perspective on it. And now it starts to have a little bit rebound back. And we will see how it goes. But on this moment, I actually will target on call options comparing to put options. Personal perspective, okay? So you can either check for the S&P 500 or QQQ or USD US 100. That is what represent the market direction. Then later on, go into the specific asset. Okay. So at that moment, when the market is turning bearish, why I'm entering in Apple is because, first of all, when it comes down here, it didn't make a higher low. A very healthy uptrend is what you can see from down here, this orange line. It will have a higher high, higher low, higher high. And what happened to this chart is, first of all, it didn't have a higher low. So this is not a healthy uptrend anymore. Now I will check on the probability of either it turn into a ranging or it will switch from an uptrend to a downtrend. And what I will do is, if it just touching the bottom and the top again and again, then it is a ranging chart. But what happened is it come back to retest this 61.8% and then going down. This means a lower high when it comparing to the previous one. Now what it need is another lower low to make a downtrend. So a downtrend will become something like this. Okay. Whenever it come back to retest this Fibonacci level and going down, it make this lower high. So the shift of structures already complete half, 50%, I would say. Okay. Then afterwards, it come back to retest this Fibonacci level again. Meanwhile, my perspective is the uptrend is no longer there. And if you compare to a ranging to a downtrend, either it will be ranging or either it will be downtrend. The probability of downtrend is higher comparing to ranging. Why? It's because there is a lower high. Okay, so this is where I get into the trades. And my exit criteria will be if it break another Fibonacci level and close above, I will exit my trade. And I will just shift my perspective to become ranging, and then I will wait for the response at the top. So what happened is I get in this level, and even though it made me suffer for like 2 days, but it didn't break and close above, and it go down very smoothly. And what happened is I'm able to take a profit when it touched the low, or I can wait until it break and close below. Okay, so it break and close below without any rejection on this support. If there's a rejection, you can see something like this happen. A green candle forming at the support. Okay, so there's no green candle forming here. It break and close below. The reason why I didn't hold for this trade is because the option that I've been called is going to expire soon. So normally I would recommend you guys to buy options with a longer expiration date, like 3 months or even half a year. That is the ideal case to hold because it give it a room to breathe. And it also give you a larger room for your account to flip. It's just that it will be a little bit expensive when comparing to those that is going to expire soon. Okay. So when I'm holding this one, I enjoy this downward movement with a very beautiful inverse relationship with a put. That's it. As simple as that. And let me just tell you another example. Because previously we have called for Tesla puts at this level. So it have a support here and it break, and that is what we call a swift obstruction. And when it come back to retest with a red candle, that means a rejections. And then at this level, it didn't just close above. And then when it come back here at this level, I get in the trade with a put options. And what happened is, if you are going to buy the put options that is going to expire with 1 month or 2 months, then you are not able to catch the whole trend. Why? Because like it dropped for 48 days. And if you just bought the put options that are going to expire for 1 month, then you're only able to catch half of them and exit somewhere in between. So you need to be aware of this one, the number in the bracket. The number in the bracket here represent the day until expiration. Okay. So as simple as that. Check on the macro, and then you can just go into the chart to do the analysis. Forget about the option chart. What you can see from the option chart is I would tend to choose those that have a very little volume and a very small candle at the bottom. That is my only criteria when I'm looking for an option chart. And the other things that you need to look for the option is the volume, the trading volume, because you want to make sure that you enter and exit without any problem. And choose for those out the money options because it's cheaper and have a better movement, a better leverage effect. Okay. So let me see if anything I missed out. Yeah, and there's a little bit hints that you can just maybe drop a little bit note down. Is that actually you can check if there's a very short-term catalyst, what I say. Why I'm entering here is because I bet that this earning report will be bad. Because first thing first, Tesla is already overvalued when comparing to what the real business is doing. So I don't believe that the actual result, the quarter result, will be outperformed to what they forecast. Because this movement is already priced in the predictions on the AI and the Optimus robot and the robot taxi things. So I don't believe that this earning will be outperformed to what they forecast. Even though it's just performing exactly like what they forecast, it don't bring any good news. It just so, okay? So even if it is so or bad result, the catalyst will become this earning, which is a catalyst, will become a bad news. And it will move the share price a lot more than what it used to be. This is what we mean by a short-term catalyst. So this is it. First of all, check for the macro. Second, check for the chart, individual chart. Then you can buy for call options or put options. Call for an uptrend movement. Put for a downtrend movement. After that, select the option that's going to expire maybe 2 to 3 months. Where if you're comparing the price and the movement. Okay. After that, if the chart itself will show you an opportunity, don't be shy. Get into it right away. Let me check on my trade. Yeah, indeed a good one. Okay. So the last hint is check for the trading volume and if there's any short-term catalyst. So that's it for today. Do any of you have any questions? If you guys don't have any questions, then we will end for our session today and continue tomorrow. Tomorrow we will talk about Tesla and Nvidia, which is what we will go through the future aspect, the macroeconomic, the evaluation, the fundamental, the financial report, and even the chart. Actually, everything just the macro things and also the fundamental, the evaluation. It just give me a in advance bias, but the final decision will just go into the chart. So if there's no more questions, thank you all for joining and hope to see you guys again on tomorrow. Thank you.